Back. Again, CPP forecasts stronger growth in 2026, driven by services and supported by easing inflation. Dr. Yusuf noted that moderating inflation could allow for gradual monetary easing, lowering interest rates and stimulating private investment. Capital markets are expected to benefit from the potential listing of Dangote refinery, which could deepen liquidity and attract portfolio inflows. So Yusuf also adds that policy credibility remains strong, reinforcing investor confidence and capital inflows. Despite optimism, CPP warns of several downside risks: persistent insecurity, which affects agriculture and logistics, oil prices and production volatility, structural constraints such as high power and logistics costs. Well, let's continue this interesting conversation and looking at Nigeria's outlook. And now my guest is Dr. Biodun Adedikpe, his chief consultant. B. Adedikpe Associates today joins me from Wellingborough in the United Kingdom. Thank you so much. It's good to have you in. Hope the weather is cool over there.
Well, it's cold, but we also have some insurance, as we call it. Thank you very much.
Thank you so much, Doc. I just spoke to a presidential aide earlier, and of course he gave the position of government as always. And I'm bringing you in to let us understand critically where we stand as an economy. It's 2026 in a few days. What is your own outlook? We've seen beautiful write-ups from analysts over the world, all across the country. The likes of you know them, Dr. Muda Yusuf, Bismarck Riwani. Everyone is saying is a beautiful outlook for 2026. But let's hear from you what you make of this.
All right, thank you very much, Tulu. Now, my headline for 2026 is just two words, and I put it simply as strong acceleration. That's what I said for 2026. And that comes from three perspectives. The first is how we saw the economy playing out this year when we began 2025. And now second is where we are today compared to the outlook we had at the beginning of this year for 2025. And now, given what we have today also and what has been done, what do we expect for 2026? So now the starting point is most of the critical macroeconomic indices that we had projected at the beginning of this year for year end, they have actually been better than what we expected. In terms of the growth rate of the GDP, we projected 3.72% for this year. But as we speak today, from the reality of the first 3 quarters of the year, we are looking at ending at 4.03%, which is better than that. Same thing applies with inflation rate. When we began the year, we were looking at 21.7% for this year end. At the time, IMF also reviewed its position to come to 23-24%. But as of today, we are talking about 14.45%. So, but even at that, even though some analysts are saying, well, base effect and all of that, we make inflation rate go up, we don't see it going beyond 14.67%, if at all, to close the year. Now, exchange value of the Naira, we looked at it for the beginning of this year, we said we'll likely end at 1554. 0.42 Naira to the dollar. But as we look at it today, from what has played out all the year up until now, we are looking at a better position of 1459.27. That's even assuming that today, tomorrow, and Wednesday, that the year closes out, that we may see a little, depreciation in the Naira. And that is what that is saying. Now, NPR also, we're expecting that we'll close the year at 26.25%. The expectation that the CBN will marginally drop that as a signal effect. But of course, the CBN has maintained 27% in the last 3 meetings of the MPC. And of course, oil price. Beginning of the year, we're looking at this year closing out at $68 per barrel. When I checked before this conversation, what I found from the website of Central Bank is that as at 24th of December, that was last week, Tuesday, that the dollar value of a barrel of crude oil Nigeria sold was $63.86, dollars per barrel, okay? Which of course, again, is not too distant from what we expected. And of course, lending rates, external reserves. Of course, external reserves again today, if you take the 30-day moving average on the website of CBN, gives us $46.42, $1 billion. which again is far better than what we expected. So in which case, this year, Nigerian economy has done a lot better than the outlook we had at the beginning of the year. Now, moving on to outlook for 2026, and this is where it now speaks to what I said, strong acceleration. Now, with growth rate expected to close at 4.03% as of today, okay, we expect that to become stronger in 2026, maybe to about 4.51%. Of course, government expects a little higher rate, no doubt, but our own expectation at firm is that the economy will grow stronger and faster than in 2025 and do anything around 4.51%. And of course, inflation rate we expect by the end of 2026 will drop to single digits. And why do we think so? Number one, looking at the trajectory from April this year up until November, available data, and then what we expect to close out the year with, and of course, looking at the expectation of growth next year, which is not significantly different, so to say, from what we have seen in 2025. So we expect, therefore, that the interplay of factors will enable inflation rate next year to drop to single digits. Exchange rate, where our own expectation in BA Consult is about 14.20, which of course is a little higher than the budget assumption of 1,400 naira to the dollar. But again, it's premised on the fact that we have now a lot more production happening locally, which means there'll be less pressure in terms of import, especially of refined products, and refined petroleum products. And of course, what we've always pointed attention to, the new manufacturing happening in Nigeria, which oftentimes analysts just sweep over and say, well, manufacturing is weak. Manufacturing in Nigeria is actually not weak. There's strengthening manufacturing. Even our GDP data, proves that as an evidence that manufacturing activities are strengthening in Nigeria. So when we look at all of this playing out, and of course, the recent efforts in terms of dealing with insecurity, we expect that there will be improvements in logistics, both from the farms and from the factories, wherever they are. So in which case, the flow of goods to the market will improve in 2026. So all of this will play out together and help us also, dampen the inflationary pressures we've been dealing with for a couple of years. Where do we expect oil price to go? Oil price we expect to be anything between $62 and $63 to a barrel. That's globally anyway. But for Nigeria, we expect it to be around $64 to the barrel. And why is that so? For Nigeria's premium crude, that's burning light, is of course higher quality and commands higher price than the Brent in the international market. So if I take the margin between burning light and the Brent historically, that tells me also we have to expect our own oil price to land in 2026. So external reserves we expect to improve to a little above $50, $50 billion by the end of 2026. Again, what I mentioned earlier, refining of petroleum products locally, expanding, and then of course, more manufacturing locally, improved logistics also impacting the movements of farm produce and other, in services. In any case, services will remain stronger as well in 2026. So all of this playing together will help in terms of reducing our dependence on imports. Even if our imports increase, of course, it will be to match what we process locally here, which will end up also replacing what would have been a commensurate expansion of imports as well. So all of this will play out and help our external reserve to also grow stronger in 2026. Of course, maximum lending rate, the last item I have on my list here. What we expect there is also a marginal reduction, but we don't expect CBN to reduce NPR significantly in 2026. We may see it go all the way maybe to about 24.5% if CBN will remain orthodox, as we have been promised repeatedly. And that means inflation targeting. If that remains the position of the CBN, we may see further efforts in terms of liquidity management and tightening. Don't forget also, 2026 is a pre-election year. So we see a lot of spending by politicians in positioning in order to also, take pole position for the elections of 2027. So in which case, we see CBN also more active, which is why we are not expecting NPR to reduce significantly in 2026. But all put together, clearly, it's a year we expect strong acceleration.
Doc, you've taken it off me, because just like my list I had here too, I was looking at insecurity, which you talked about, agric and logistics, oil prices and productivity, then geopolitical issues, which you also touched on, pre-election fiscal and political uncertainties. You know, I also asked, you touched on that. But let's look at debt service pressures, which some say is about 15 trillion naira in 2026, about 50% of projected revenue. That to me is worrisome. You would agree with me. There's some structural constraints like high power and logistics too. Can you take us through that?
All right. Now, for me, when it comes to debt servicing, there are a number of variables to look at. But the one that is most fundamental is your debt servicing to revenue ratio. And don't forget, when you are dealing with ratio, there are two elements there. There is the debt servicing, which is now the numerator, and then your revenue is the denominator. So if any of them changes and the other one remains constant, that ratio will change. All right? So for me, I am not worried much about the position today, and even what the budget says as we speak now, because the budget that Mr. President presented to the National Assembly puts it at a little over 15 trillion naira. Now that's debt servicing. Now when I look at that vis-a-vis revenue, of course, as rightly said, it's actually a little below, 50%. It's not up to 50% of the revenue. But the reality is that if there is improvement significant in revenue, the ratio we are looking at today that we say is worrisome will actually change its, toga, let me put it that way. In which case, increase in revenue becomes very key. So it brings me to what I always tell directors of companies, private companies, that look, the best strategy for dealing with cost is to increase your revenue. We did the same thing that we apply in this instance. The best approach and strategy for this matter is to increase revenue. So how does that happen? That means we must be deliberate and insistent on execution and implementation of the new Tax Act. Very, very important to Nigeria, because what that will do is to plug so many leakages we have experienced over the decades and give us an opportunity to expand revenue without worrying so much about the various ratios we compute with revenue as the reference. So that, for me, is nothing too worrisome if it works very well in expanding our revenue base, which you have potential to do as of today.
Getting more interesting. Now, another concern is the tax law, which many say there might be a bit of pushback. You know what is going on and what we've been hearing. And there are a lot of concerns with regards to that. So I don't know if you are also worried about the implementation. For me, that is what I am also worried about.
Yeah, thank you very much for bringing this up. In fact, for me, there's a whole lot of misinformation on the Tax Act. On a platform just some 10 minutes ago before I joined you, I had to correct a wrong impression some highly placed professionals were pushing as a narrative on that platform, claiming that government is going to tax bank deposits. And I asked myself, people who make all these claims on the Nigerian Tax Act, have they actually read the act?
Yeah.
Do they really know the provisions? Because each time you hear them talk about, push back on the provisions in the law, you wonder where those arguments are coming from. So it also tells me that people have not taken time to look at the act. Even in terms of interpretation, for example, of the capital gains tax, is also a total misinterpretation. Because what the tax act says is that, look, if a company makes gains, ordinarily that is part of your income. So why should you pay 10% capital gains tax on that, like Biodun Adedipe will pay on capital gains he makes in the stock market? So it's a corporate entity, different from a private individual. So there should be that difference. And then secondly, the act also says that, look, my friend, if you are reinvesting the gains, it will be zero tax.
Zero tax.
But none of them mention that. They don't mention that. And there are many other things in there. Of course, I had to, on another platform, I had to teach someone, a highly professional too. Now listen, he said, oh, somebody else will earn about 20,000 naira. That the government will take all this money for tax. I said, look, let's use the tax table that is in that act. And I played it out. I said, by the time this guy takes the relief for his rent, he probably will pay zero tax if he earns 20,000 naira. By the time he takes that, the rent relief, he probably pays zero tax. So, that, like I said at the beginning, in answer to your question, there's a lot of misinformation going around. But I think also members of the committee, because I belong on the several platforms with some of them, they're now also coming up and putting the right information, so that we need to get more of that out, so that Nigerians generally will understand that this tax act is Nigerian. We should stop calling it Tinubu tax reform. It's for Nigeria. Even though it's the president that initiated it, he owns it, so to say, but we are trying to create a political narrative around what is beneficial to the economy and the reality of Nigerians. For me, it's a good thing coming for Nigeria, been in that space campaigning for this since 1997. You can understand why I feel this way. We've been campaigning for this, advocating for it, since I personally got involved in 1997. And that's almost how many years now? We counted almost 50 years. Almost maybe 30-something years. Okay? So it's a good development for Nigeria. We should see it as such and stop misinforming the public about what is not in the provisions.
So finally, your thoughts again, right. What Nigerians should expect as we move into 2026 around our economy, around the tax laws, and of course, around the greater outlook for greater expectations for the man on the street. Yes, let me put it that way.
Okay, thank you so very much. We call it pleasant surprises. And that's the way I would put it simply, pleasant surprises. Because people have a particular perception now about the economy, and now this would affect them. But when they get into 2026, and things actually turn out better than they expected. And that's what I hope, that people also acknowledge that. So that when we say that, oh, we don't know what our taxes are being used for. When you drive on the roads, you remember that taxes are part of what is fixing the road. When government employees also get their salaries and allowances, you must also remember that the taxes are paying those salaries and allowances. When you go to hospitals, you go to public schools, whatever is provided there, even if it is not up to what we expect, it is also tax money that is funding that. We must begin to see it differently than we did in yesteryears. Once we change that perspective, then we see that things are actually getting better than what they were the year before. And I'll close my own thought on this with this. A bag of rice this time last year was priced above 100,000 naira. But we speak today of 60,000 naira for similar bag of rice. We may say, oh, it has not gone back to where it was 10 years ago. Nowhere in the world will the price of anything today be the same as it was 10 years ago. You can't find that anywhere. Okay? There's always inflation as part of the story of human beings. So, but the point is, has there been improvement in the last 1 year? Oh, yes. Can that be carried into 2026? Yes, we have every potential of carrying that into 2026. So I expect, therefore, that many of us will get pleasant surprises when the tax act begins to be implemented. And of course, when the acceleration we expect for the economy begins to impact the common man, that man on the road. Thank you very much.
Dr. Biodo Adedipe Amos, thank you so much for your time. I guess our next conversation will be in 2026, God willing. But I must thank you so much for joining the show live from Wellingborough in United Kingdom. We really appreciate this.
It's my pleasure. Always an interesting conversation with you to do.
Thank you so much, sir.
We'll see you next year.
All right, see you next year. Well, that's Dr. Adedipe live for you. Well, Effiong Ekop is in the studio, and we're going to take it from exactly where Dr. Adedipe stopped. Ekop, there seems